I guess the easy answer to the last 10 years is the fallout from the global financial crisis. So how that's affected markets, the shakeout from that, the disappearance of some players and the emergence of others. To that, I'd also add the internationalization of Europe's market. So back in 2007, a pretty small proportion of capital was coming into Europe from outside the continent. That's increased year on year, so it's now around 35%. So I think that internationalization of Europe's market is a trend that's characterized certainly the period since the last financial crisis. The next 10 years, I think there'll be the shakeout from the extraordinary period of monetary easing that we've had and how that affects the market, but also how the new players who've come into the market in the last 10 years behave. Are they long-term holders? Or are they going to start trading their properties? How are they going to behave? Are they going to behave in line with the European institutions, or are they going to do something differently?
Okay, good. Arthur, what's your selections?
Well, 10 years ago, 2006, the world was very different from now, and we obviously, over the last 10 years, went through, and I've been in the industry a long time, through the worst cycle that we've ever experienced in my lifetime, and I think that was, we've now got a lot more regulation in place. We talked about, the different types, the greater breadth of investors. We talked about the lower leverage and so on. So the world has changed quite a lot, and I think that we're unlikely to go through that extreme volatility. Clearly, markets are going to remain cyclical, but I think that was the extreme, and things have now been put in place to ensure that we don't go quite through those extremes again. And then looking forward, as I've said before, I think over the next 10 years, what we're clearly seeing, and as most capital, the origins of most capital is down to individuals who are saving. And what we're seeing all over the world, even in established markets like North America and Europe, people are saving for their future. They're putting more money into their pension schemes. And then you've got this whole wave of capital out there in Asia where individuals are taking out life insurance policies and pensions for the first time ever. And notwithstanding the growth has slowed down there and so on, they are also recognizing they're going to have to save for their future. So the amount of capital and the weight of that capital, I think, is going to put us into a much more sustainable market over the next 10 years. Returns will not be so great, and it'll be tougher to make money, but it's going to be more sustainable in my view.
Great. Pertti.
What can I add? Guys, it will be tough for you. I think regarding the past 10 years, I think that what I like to add only that the transparency and professionalism has increased quite a lot. I think that when you take a look for the people here in MIPIM and elsewhere, you see that much more professional, much more higher educated professional people, and that's good for the industry. Forecasting is impossible, as we all know. I think that the only thing what I would like to say is that obviously there will be some crises and black swans, no doubt about that.
I was going to say something a little bit similar, but to almost answer both sides of the question with the same point, which links into that, which I think is that actually it's easy to forget that particularly in Europe, the real estate fund management or investment management business is quite young. And relative to other asset classes. And I think it's already gone on a journey. I think the crisis has accentuated that journey and again, has definitely led into professionalism, and regulation has then added to that. And I think that our industry is going through a journey. And I think that with all the breadth of capital that we were talking about before, you add that to an industry that is actually much better at telling investors what it is they're actually investing in and what the returns are they're getting, which it's taken us a long time to get to. I think those are going to be a very positive thing for real estate. So I'm quite optimistic with that breadth of capital and an industry that's increasingly more professional in how it does its job.
Well, 10 years ago, I think we were spending time in Russia and doing crazy deals, and that has vanished, at least for us. We are doing more professional stuff. I think we are not doing just the Excel models. We are taking our brains into consideration and not just the numbers. That has really changed. It might be maybe also part of the entire industry or the firms I'm working for. I think going forward, I think portfolio theory will drive globalization, because today many real estate portfolios are quite domestic, and portfolio theory tells us that we need to become more diversified. I think that will drive international change. The other thing is that in countries like Japan or Germany, where you have demographic factors kicking in 10 years' time, we will see that. We will see that in the residential market, that we need completely different concepts. And also in the office sector, we will see that the office population or the people working in offices will probably go down, and we have strong effects on secondary office markets.
I think maybe one of the big changes that I've seen coming out of the last 10 years and out of the last cycle is investors probably being a bit more disciplined, the industry probably being a bit more professional, a bit more open with their investor base, and perhaps the people working in real estate being a little bit more financially aware, let's say. So I think the asset class has moved on quite far, I think, in recent years. I think a big trend we're starting to see now, and one which will continue, is this globalization of real estate. All the big investors that I talk to have probably got quite a large domestic portfolio, and they're busily trying to diversify that internationally. And I think that is a trend which is set to continue. And going to Arthur's point about Asia, and our organization would be a case in point. So our parent company expanding in Asia, selling life insurance policies, that money that's raised ultimately flows back into the asset management business, and people like us invest it in real estate. And I think we're very much at the tip of the iceberg in terms of the volume of capital that is going to continue to come out of Asia and increasingly dominate our markets.